Yeah, good morning, everybody, and good afternoon in Beijing, especially for our speaker, Mr. Schuknecht, Ludger Schuknecht. As you know, our topic today is about AIIB, the Asian Infrastructure Investment Bank, and the topic is that multilateral development finance bank, and Mr. Schuknecht will give us an insight in the business of the bank. Maybe you know that that AIIB is already the second largest development finance bank in the world, has more than 100 members, including Germany. A dominant member is China, who actually launched the bank already in 2014 and also is in charge of around a quarter of the capital of the bank, which was at the beginning the starting capital, 100 billion US dollar. A special goal, Mr. Schuknecht will explain in more detail, of course, is the sustainable development in Asia, especially for emerging and developing economies, with a focus of infrastructure, but also climate change project. And in recent times, I understand it is also because of geopolitical reasons and tensions to make sure that there is enough supply of food. Of course, the time is challenging. I already mentioned geopolitical tension, but we have also some issues with overborrowing of some countries with regards to sovereign debt. And I'm sure either in the presentation or later in the Q&A question we can talk on that. Having said that, I hand over to my colleague again, Rüdiger von Rosen, who will, together with me, moderate, and he will introduce Ludger Schuknecht. Please, Rüdiger, the floor is yours.
Thanks, Horst. Most hearty welcome from my side as well, and we are very honored to have Dr. Schuknecht with us today for knowing much better the tasks, obligations, possibilities of AIIB. He is well known in Germany. He was running as chief economist and director general the Ministry of Finance in Germany quite some years ago. Worked as deputy secretary general at the OECD, is in various extensive working experiences and positions with international financial institutions, and is from August 21 on the Vice President and Corporate Secretary of AIIB, located in Beijing, responsible for relations with all its members, the Board of Governors, the Board of Directors, and other aspects of governance, including the admission of new members. So he is practically the person in charge of AIIB, and we are proud to have a German in this position. So, Dr. Schuknecht, you are most welcome to start, and we were listening very carefully to your remarks, and I think we have a lot of questions later on to you and to all the tasks of AIIB. Please go on.
Unmute. Thank you very much. It's a great pleasure for me to be in this seminar this afternoon and to introduce to you the Asian Infrastructure Investment Bank, which is part of the Multilateral Development family, a Multilateral Development Bank family, which the World Bank or the Asian Development Bank or the European Bank of Reconstruction Development, the European Investment Bank belong to, and which at the national level has equivalents like the KfW, the Kreditanstalt für Wiederaufbau, and similar national institutions. As you are promised, you can ask me any questions you wish afterwards. I may not comment on everything that interests you in my presentation. I will keep it mainly to the facts around the development banking world. So, but please feel free to ask afterwards. I'm also very happy to present to the Frankfurt School of Finance, which as a Frankfurter myself, where I've been living since 1999 and where we are only, so to speak, on leave from right now, which I think is one of the best schools of Germany. And you can be very proud to be students there if you're students. And if not, then I'm also very happy that that you are listening to this presentation. Let me start with my own slides. It's a relatively big slide pack, but don't be scared by it because I will not comment on many of the slides, but you know, if the school wants to distribute these slides, you feel very much free to do so. It gives you a little bit more information beyond my presentation if you wish. So does this work now? Do you see the slide, or is it not in the right presentation mode? Probably it is not in the right presentation mode. Let me just go to that again. Now we have a problem here in my PowerPoint. I just had it on beforehand. Nope, it is. I'm afraid my PowerPoint is acting up. I would have to reload the slideshow. Give me a second.
Actually, we also have if this is too much, we also have the slides. We can share it from here. So if you like that.
Yeah, give me a second because
no problem.
I don't want to focus on too many of the slides, and there is too many, and then we risk to have some confusion here. Okay, so let me try again. Share screen. I think this is the one. So now you should see it, right?
Great.
Great, yeah. So now let me see whether the switching of slide works. No, that doesn't work either. That one works. Good. So AIIB, as you know, the biggest of the multilateral development banks is the World Bank. And I mentioned a couple of the other ones that form part of that group. The objective of these banks is to promote development and alleviate poverty, and now increasingly also climate change as part of the development and poverty alleviation and sustainability agenda has entered the picture. The AIIB, and I'll show you probably a slide later, right now in terms of kind of market share is not yet the second biggest bank. It's the fourth biggest one. The World Bank has a market share of maybe 60%, and we are still somewhat below 10%. And the annual lending, for instance, in 2021 of the whole multilateral development world was 150 billion. And we had about 10 billion. The World Bank about 60. 90. So we are actually a big bank. If you look at our capital, it's 20 billion of capital paid in. We are AAA rated bank. And in the 7 years that we have been operating so far, our lending volume has been slightly above 40 billion. The number you see here with 32 is already almost a year old. What makes the AIIB similar to the other multilateral development bank is the focus on high standards, high project standards, especially in terms of environmental, social, and procurement governance. And with these high standards, it's very much at par with the World Bank or the KfW or other similar organizations. It also is very much at par when you look at the governance of the bank. It's, you know, various controls and lines of defense when it comes to ensuring that the high standards of the projects are actually not just existing on paper, but also being implemented. And in that sense, it is a very modern organization in line with some of the other MDBs. And you can see that also in the fact that now we are the biggest co-financing partner, so the biggest partner in project finance of the World Bank, bigger than all the others, and also the Asian Development Bank. So after only 7 years, I think we've achieved quite a lot in that regard. There are a few points on the governance of the bank where we are different to the other MDBs. And some of this may be a bit too detailed for you at first sight, but it is important when it comes to putting the AIIB kind of in the global landscape of development banks. First, it's the only major international organization, as a matter of fact, that is headquartered in Beijing, and it is in China, and it is also the bank that has, with 1/4 of votes in the hands of China, about the biggest shareholdership of China. But at the same time, it also has about a little over 1/4 of the votes in the hands of the Western countries, and almost the remaining half in the hands of emerging and developing countries, in today's developing and emerging countries, mostly Asian. So in that sense, it reflects, it's very much a bank of the 21st century in that it reflects the change in the relative economic weight of countries in the world. When the World Bank and the so-called Bretton Woods institutions were created and the established multilateral and national development banks, the share of Western countries was much higher. They comprised maybe 60, 70, 75% of global GDP. Today, the G7 are only 40%, and the shareholdings, that structure that we have, reflects much more what the future relative weight of economies is likely to be. At the same time, we have these high standards, and we have been applying them in a sustained manner for these past couple of years. And despite a shareholder structure, an ownership structure that is very different from the multilateral banks like the World Bank, where the Western countries have a majority. So the question for the AIIB, or the experimental value of the AIIB in a way, is you know, a bank where the West doesn't dominate, still going to work and deliver high quality work. And that's one of our challenges. And I think so far we've done quite well. And if you look at our governance, I think that is really the key why it works and why I think it will also work in the future. All the important decisions in the bank require a 75% majority. So all the decisions on policies and strategies require a 75% majority. The vote of the next president, the current president is Chinese, and his term will end in 2026, will require a 75% majority. So
sorry, please forget to move forward with the slides. We still have the first slide here, seeing.
Yeah, that's fine. That's fine. I said I will only focus on very few slides.
All right. Okay, then go ahead.
Mm-hmm. Yeah. Sorry. No, I didn't mean to. I hope I don't bore you with what I'm saying, but it is important because you know, there are people who claim that this is a China-denominated bank.
Mm.
But if China, with 25% of the shareholdings and all the important decisions require 75% majority, China cannot dominate the bank. China has a blocking minority, but cannot dominate. The same way the Western countries have a blocking minority in the bank, but they cannot dominate it. because with 25%, you can block the future president, you can block policies and strategies, but you cannot implement or impose your own. That, I think, is a very important feature of the bank. Another important feature is that we have a supervisory board in which the members sit that is not residing in Beijing. It is residing in the capitals. So it is working more like a modern bank where the supervisory board actually takes a strategic role and is not in the bank's building, so to speak, like in the World Bank, and then interferes with projects and micromanages. So it is more an arm's length bank, and I would call that modern governance principles. We also have the obligation to be sustainable. That is, we have the obligation not to make losses. So it's a bit like a non-profit organization. We are supposed to cover our costs. It's also covered in our values called under lean. So clean is for high values, green is for our focus on climate, and lean is for being cost efficient and sustainable. You may ask why I'm emphasizing that. The reason is that this is not the principle that the other MDBs have. They regularly use up their capital and then they have to go to their shareholders and ask for replenishments. So this lean principle and sustainable principle requires us to only finance projects that are actually of high quality and cover their costs. And so that, I think, is in a way, from a perspective of efficient use of resources, I think a good principle. Now, what is the bank doing? Let me say first, okay, we have over 100 members already, which covers 80% of the world population and 65% of global growth. And here's our ownership structure. China is the most important shareholder, then India, Russia, Korea, Australia in Asia. Germany is the biggest non-regional shareholder, so outside Asia, then France and a few others. Our client countries is with about 1/4. The biggest one is India, and then roughly 10% Turkey, China, Bangladesh, Indonesia. So these are our biggest clients with whom we do the projects. We have done over 200 projects and over 40 billion of financing. This is the comparison slide with other MDBs that I mentioned. So much bigger the World Bank Group. You know, this is our lending volume after 4 years. The World Bank 15 times as big, the Asian Development Bank 7 times as big. But already here with the African Development Bank, you see in the new lending, they are smaller than us, and the total assets due to their longer history is bigger, but the flows are smaller. EBRD probably will get, in the next couple of years, will get roughly to a similar size as the EBRD, the European Bank of Reconstruction and Development. So what are we focusing on? I think that is what most of you might be also very interested in. We are focusing on, we have basically 2 pillars of activity. The first one is green infrastructure, climate oriented with a climate focus, and private capital mobilization and promotion of private non-sovereign infrastructure finance. Our focus is on infrastructure, as this slide says, but we also do related productive sectors, so infrastructure in the wider sense, which includes health and social infrastructure. So 50% of our lending is in climate finance. That we already reached actually last year. And the target for 2030 is that we have 50% financing approvals, not with sovereigns, so that's state-owned enterprises, not local governments, but also simply the private sector. And there we were at 35% last year, so we still have some way to go. In addition to these pillars, we are emphasizing that our infrastructure actually connects people and regions, and that it is more tech-oriented, more digitalized, more high-tech than traditional infrastructure investment. So as an example, we would perhaps tend to invest less in building schools, but more in digitalizing education systems. Like we have one project, for instance, in Gujarat that does exactly that, contribute to the digitalization of their infrastructure, of their education infrastructure, so their school system. Now, green infrastructure, you see here on the right, 56% climate financing last year already. Another pillar of this green commitment is our commitment to be so-called Paris aligned. That means that all our projects have to be part of or in line with national commitments under Paris and with national strategies in as much as they exist to achieve the decarbonization objectives of Paris. And it also means, Paris alignment also means that we cannot and will not do financings in certain areas like coal or almost all oil, and also only very limited gas in very exceptional and clearly defined circumstances. So the focus is clearly on renewables. Then we also have what we call the Sustainable Capital Markets Initiative, which means that our financing, because our projects are all following high standards for environmental, social, and governance, our financing is also sustainable financing, is certified internationally as sustainable financing, which makes it eligible for sustainable for sustainable investment strategies by investors. So let me see. So we have two types of financings, so-called sovereign and non-sovereign. So sovereign is basically projects with governments. That's mainly loans and guarantees. And then we have so-called non-sovereign financing, which I mentioned is state-owned enterprises, local, regional and municipal governments, and private sector firms. And what we typically do is we finance at our low borrowing costs for the sovereign sector, plus basically a markup that reflects our operating costs. And for the non-sovereign projects, there we actually apply a different calculus. These have to be profitable, or profitable in the sense that they have to generate a certain return, and this is calculated on the basis of a number of parameters. So that we, especially on the non-sovereign side, make sure that these projects are actually economically and financially viable. So also, perhaps for me to mention, we have opportunities. We have basically this triangular relationship where we have our member countries that can be at the same time our client countries for projects, and they can be also countries where our contractors are coming from. And contractors you have to see in a broad sense. This can be in the classical sense, a company building a road or building a power plant, but it can also be banks or fund asset managers that do on lending then to banks in developing countries, or that set up funds for infrastructure investments. And here, I think the value added of this, so to speak, financial sector engagement is that we don't just provide benefits through the financing of a certain project, but we try to provide these benefits via the development of financial intermediaries and whole markets. So just to give you an example, we have a project. Let me see whether I find this. Yeah, for instance, this is one of our flagship projects that is one of the first infrastructure securitizations in Asia. Infrastructure assets, securitization of infrastructure assets is not very easy, but it's pretty common in Europe and in the US. But we have done the first infrastructure securitization in emerging and developing Asia. And that means you take banks that have infrastructure assets on their books can sell them to this vehicle called Bayfront Infrastructure Management, and then they securitize a collection of these loans and thereby create balance sheet space in the banks for new infrastructure investments. Another market development that investment that we have done is, for instance, through Aberdeen, where we have a big fund which invests in companies, in infrastructure companies that have their green risks, the risks on their balance sheets assessed and measured, and kind of a plan for the reduction of these environmental risks on their balance sheets, or that are on the way to this reduction of these risks. Now that's another one, that's Amundi. Then we have another one where we invest in, where we have 500 million investment, where we basically invest in companies that invest in green infrastructure, and infrastructure that fulfills our ESG standards. So by having these funds, you know, we don't just kind of have our high standards implemented for one project, but for a whole series of projects, or for a whole series of companies that want to benefit from our favorable financing conditions. So that's kind of the financial market side. And then there are many kind of traditional infrastructure investment projects that we invest in. This is the one from Amundi that I mentioned. Here, this is a wind project in Kazakhstan. We also work with Chinese banks, and with the Chinese Exim Bank, which is kind of the KfW equivalent. And the reason why we work with them and why they want to work with us is so that also the Chinese development banks apply high international standards and develop their own capacities to finance with high standards. So I would say that our development benefits are not just coming directly through our the projects we finance, but also indirectly through the financial, through the banks, through the financial intermediaries that we help to develop and that we help to apply high standards. Here is more projects that I just quickly flip through. Now you can see this in the distribution in the slide set that you will hopefully get after this presentation. Let me just comment on the challenges for the AIIB ahead before I conclude. So our vision, that's our challenge. We need to still grow. We are only 7 years old. We are a young child in the development world, where, you know, the World Bank is now 75 years old, and I think the Asian Development Bank almost 60 years. So we want to maintain this model of sustainable banking with all our members. We want to be a respected, responsible, and accountable member of the MDB family, where all the members are proud to be a member of. We want to stay lean and not succumb to bureaucratic tendencies to grow and become more expensive and slow. And I think very important today, we want to be a bridge for multilateralism with so many conflicts around us. As regards our operations, the challenge will be to contribute to decarbonization and preventing climate change through our modern energy strategy, and promoting private sector development and supporting the post-COVID recovery with good infrastructure through the implementation of our corporate strategy, which is, as I mentioned, focused on climate and on private sector development. So let me finish with this and stop sharing the slide.